just recently brought up how I trade with SPY and using the tick. So basically what tick is that it shows the different levels of buying and selling in the market and in SPY. So basically if you have extreme buying or extreme selling going on, the tick will basically pick it up. So what I really like to do is look for either trends in the tick, or I look for extreme values in the tick. I just recently started using this, so like I'm still learning as we go, but this is what I've noticed so far. So basically what I've been trading on the tick with SPY, if you are a day trader with SPY, this is beautiful. Basically what you will see is that when you have an extreme selling pressure or extreme buying pressure, the markets basically cannot sustain those levels forever. And so I found that the levels in which the market will normally bounce at or have a quick reversal is where the tick is at either 1,000 or at negative 1,000. Or you can have a little bit closer around like negative 800, positive 800 and above. But the strongest reversals would be above the 1,000, negative 1,000 mark. So basically here we have, for example, we have SPY. This is a couple days ago when we had that big sell-off. So we see here that SPY on the tick we have at 918, it touches down to a low of negative 1,189. And so that is at 918, right? And so at 918 this time, on the chart of SPY, we could see that there was immense selling off. We had a very strong selling pressure here. And so then what we see here is we have a quick drop in SPY, like a quick long candles down. And so when I'm day trading and scalping, my favorite place to do are buying bounces on big drops. And so this is why having the double confirmation both in the tick and the drop into buying to a bounce is perfect. So I see here that SPY is coming down, has a quick sell-off into the daily pivot. At that same point, the tick is passing the negative 1,000 range, indicating that there's extreme selling pressure, which means that we will most likely see a bounce up. And so I, knowing that, buy into this rating on the tick right here at 918, and then from then on it bounces up, you can see, and then it rides up nicely. And so that's great for getting intraday plays, but it also can be used to show trends with the tick. So what I have on here is the 9 and 12 EMA on the tick itself. And so we can see here, this was a great play if you're just trying to do a quick scalp, but what's the overall trend? Overall trend here is just going downwards, right? So we can see here that the tick, the moving average on the tick cannot pass 0. When you have a moving average on the tick that cannot pass 0, that means that the markets are going to have a nice sell-off. That means the trend is just overall trending down. So what that means is, like, even though these ticks here are coming down, right, we don't want to buy these bounces. I mean, we can. Look at these. There's little bounces for scalps, but why would we want to do that when the overall trend is riding down? We could just buy at the top and just ride it down. And so as you see here, like, when you have a tick that will occasionally touch down at the negatives, or the negative 1,000 or positive 1,000, that is the perfect opportunity to do a quick scalp. But once you see that the levels of the tick continuously hang around these low levels, that means there's immense selling pressure, and the stock is just going to continually trend down. So we'll look at some more examples as to like how I basically trade off the tick. So here we have on the 29th, we can see here that the tick has been hanging around 0 the entire day. It's sort of, when you have a tick going from around the 400 to the negative 400 range, that's just noise. You don't need to trade that. That's just the SPY just bouncing around. So we see here that we have SPY just sort of flatlining throughout the day. We have a nice little push up here where you can see that the tick has a nice push up. But this is what we're interested in here, when it has a nice big sell-off. And we see this big sell-off right here two candle bars down, we know that there's most likely to be a bounce. And this is what confirms it right here. On the tick at 1203, right here at 1203, the tick fires off at negative 1,000. And so basically we're going to want to do a fade play on that. We're going to want to go long against all the selling power, because we know that once the buyers step in, then it's going to have a nice little pop. So we get in here, get a couple calls right at the bottom. When the tick fires off, boom, it pops up. We see the same thing, even bigger sell-off. It comes down right to this level, and we can see that these levels on the tick haven't bounced at this level or been at this level all day. So when you see it relative to the day, that it comes down this far, you can assume that there's going to be another bounce. So we see here it comes down, tick levels hit low, boom, we buy up. And then same thing happens when it comes back down to negative 900-ish. We have another bounce right here, and then boom, you could ride this all the way up. So that's just a little bit more about how we play the ticks. So then let's check out another example. This is on the 30th. So this was on the day where we had the whole talk about the coronavirus, and we had that big run up in the end of the day. So as we can see here, this day was just full potential for day trading and scalping. This was literally within 1 minute you could have made, let's see here, how much is that? This play right here, $1 move in a minute. And so we see up here when it pops up, this tick hits an extreme range of around 1250. So that's showing extreme buying power, but we know that these are extreme values. So we assume that most likely we'll have a quick reversal. So if you had bought in at the top of this tick when it fired off above 1,000, you had bought a put. I mean, of course, this is not going to be the norm, right? You would have made, the stock would have dropped $2 within the next minute on that indicator alone. And so we can see here that the EMA on the tick cannot pass below 0. So this is showing a consistent uptrend throughout the day. So you see, so sure, we have the one bounce, right? We have another bounce right here on this part of the tick. Here, correlating right here. Keeps hitting 1,000. But we see that the tick is hovering at the 1,000 range, indicating that this is like a very, very strong area for the buyers. We see that the EMA on the tick can't pass 0. We see that the tick keeps getting rejected at 0. This is showing us a strong sign for an uptrend. And as you can see here, the stock just keeps riding up. If you held throughout this before, like if you basically bought in at the beginning and said, I won't sell until the EMA of this passes 0, you would have made $3 on SPY in options. And that's a good gain. So finally, let's move over to the 4th, which is today. Oh, sorry, the 31st. Let's move over to the 31st. And as we can see here, another strong down day in SPY. As you can see, the ticker EMA struggled to pass 0, showing a good sell-off in the markets. And then overall, it's just hovering around this negative 700 to negative 450 range. And then all of a sudden we have that's just free money. And so we have another one. Not quite as low, but it hits negative 900s. We see a nice little sell-off, boom, pops right back up. It's $1.30 right there. Just green. And at the end of the day here, we can see that it goes up. Got some buying power. And then we see here at 11:30, 11:32, hits the positive 1,000. So once it hits here at 11:32, right at the top here, you'd buy puts. And you could ride this all the way down. That's another 84-cent difference in SPY. Yeah, as for the rest though, you really don't want to be trading the tick when it's like in the negative, 500 to 500, even the 600s. you can start noticing trends of where it bounces. See how here, like it normally would bounce around the 700 range for this day. So anything lower than that would show, like right here, would show an indication of good opportunity to get long on the stock. So this here is on the 3rd. So let's just go check that out. That was just yesterday. So this was a day of big moves in SPY. It was a bit choppy, but some good potential scalps right here. So we see comes down to almost negative 1,000, and right at the same exact time, SPY just has a huge sell-off. And when this ticker flies off at 10:12, right here, 10:12, you could have been in long, caught this nice bounce up. It's that easy. I almost forgot to mention is you don't want to trade the tick or within the first half an hour of the market or the last half an hour, because as you know, the whole beginning of the market is pretty sporadic. You can see that each day the stock opens, it just is already starting above 1,000. So I mean, that just doesn't give you much opportunity to determine what the stock's going to do yet. So you want to wait until the first half an hour of trading is commenced, or you don't want to touch it within the last half an hour. But that's just the rules that I have for myself. If you have any other questions, just let me know.